This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Pachortiz. Thanks for joining us at XM.com. The stimulus-led stock market rally faltered on Friday as investors paused for breath after sharp gains in a week when U.S. President Joe Biden formally took office, reaffirming expectations of higher spending and borrowing under a Democratic administration. However, profit-taking wasn't the only reason stocks were nursing losses, as worries about a recession in Europe, a new COVID outbreak in China, and higher taxes in the United States spoiled the cheery mood that had prevailed for much of the week. A warning by ECB President Christine Lagarde that the Eurozone could be headed for a double-dip recession, combined with weak flash PMI data, underscored the near-term economic risks from the latest virus wave. But it's not just Europe and America that are still grappling with high infection rates, as the recent outbreak in China appears to be escalating, with more districts going into lockdown. On Wall Street, the S&P 500 and Dow Jones ended Thursday more or less flat, as speculation that the Biden administration could start raising taxes later in the year gave investors something else to contend with. The Nasdaq Composite stood out as it closed about 0.55% higher on expectations of a bumper earnings season for tech stocks. The U.S. dollar regained some footing on Friday, but was still on course for hefty weekly losses against its rivals. The euro was a surprise outperformer as it held on to yesterday's gains after Lagarde dispelled suggestions that keeping Eurozone yield spreads in check amounted to yield curve control in her post-meeting press briefing. Whether the dollar's latest turnaround is able to gather further momentum or not could depend on what President Biden talks about in his address at 1945 GMT on the administration's response to the economic crisis. The pound and the commodity dollars all pulled back on Friday. The Kiwi is on track to be the week's biggest gainer against the U.S. dollar, though the others are not far behind. The UK's services PMI crashed in January to the lowest since May 2020, even as Prime Minister Boris Johnson signaled the lockdown is unlikely to be eased anytime soon. Yet the pound's losses were no greater than its peers, as investors are eyeing Britain's impressive vaccination program, where almost 5 million people have now received their first jab. This was today's Daily Market Comment. Thanks for joining us at XM.com.